Stop, do not skip this video because what I am about to explain will completely change how you see insurance companies forever. Most people think insurance companies make money when you pay premiums and lose money when they pay claims. But the truth is far more shocking. Insurance companies don't make most of their money from insurance. They make it from investing your money. Yes, insurance is just the front door. Investing is the real business. And once you understand this, you will never look at insurance companies the same way again. So stay with me because in the next few minutes you will discover how insurance companies quietly build billions using money that doesn't belong to. Think about this, every month millions of people pay insurance premiums, car insurance, health insurance, life insurance, home insurance. You pay and you hope you never need it. But here is the question most people never ask. What happens to your money after you pay the premium? Does it just sit there? No. That money goes to work and not for you or for them. If you are still watching, comment invest below because this next part explains everything. Insurance companies collect billions of dollars in premiums every single day. But here is the key detail most people miss. They don't pay claims immediately. Some claims are paid a month later, some years later, some never, which means insurance companies are holding huge amount of cash. This cash is called float. Remember that word float because float is where the real magic happens. Stay with me because this is how $1 billion machines are built. Let's see float explained simply. Float is money insurance companies hold temporarily. It's not technical their money, but they can use it. Imagine this. 100 million people pay $500 each. That's $50 bill. Insurance companies don't pay out $50 billion immediately. Maybe they pay $30 billion in claims over time. That means they are holding $20 billion and they invest it. Pause for a second. Ask yourself, what happens when you invest billions of dollars? You make billions more? If this makes sense so far, hit like button and keep watching because it gets even more. Where they invest? Insurance companies invest in stocks, governments bonds, corporate bonds, real estate, infrastructure, private companies. They become a massive investors. In fact, many insurance companies are among the largest investors in the entire stock market. They invest long term, they invest patiently, and they invest using your premium money. This is why insurance companies grow richer even if they pay claims because their investments generate constant profit. And here is the crazy part, sometimes they make more money from investing than from insurance itself. Stay with me because the next example will blow your mind. Let's see Warren Buffett example. Warren Buffett understood this better than almost anyone. He built Berkshire Hathaway into a giant partially using insurance float. His insurance companies collect billions in premiums. That money becomes a float, and Buffett invests that float into stocks like Apple, Coca-Cola, and others. Over decades, that floats helped him build hundreds of billions in wealth. Think about that. Insurance gave him investable capital. Investing made him rich. Insurance was the engine, investing was the rocket. If you are learning something new, subscribe now because most people never hear this explained clearly. Why this model is so powerful? Insurance companies have a massive advantage. They receive money first, they pay expense later. This gives them time, and time is the most powerful force in investing. While your money sits idle in your bank account, their money grows in the market. While people focus on premiums, insurance companies focus on returns. They are not just an insurance, they are investing giants. And this explains why insurance companies exist for decades, even centuries. Because investing creates exponential growth. Stay with me because now we will expose the most important insight. The business model revealed. Insurance companies operate on two profit engines. Engine 1, underwriting profit. Engine 2, investment profit. Underwriting profit comes from premiums minus claims. Investment profit comes from investing float. But here is the key truth. Even if under, Even if underwriting profit is small, investing profit can be massive. This means insurance companies can still grow even with claims. Their true power is invisible scale. The bigger their float, the bigger their profits. Comment float if you understand this concept because this is how financial empires are built. Why this matters to you? Now you might be wondering, why does the matter to you? Because this explains how financial institutions really works. They don't just sell products. They collect capital and they deploy that capital into investment. This is how bank works, this is how insurance companies work. This is how financial empires grow. They use scale, they use time, and they use investing. The rich don't just earn money, they invest money, and institutions do it at massive scale. Stay with me because the final insight is the most important. The big realization, insurance companies are not just insurance providers, they are investment machines. Insurance is the mechanism, investing is the mission. Every premium adds fuel, every year adds growth, every investment adds power. This is why insurance companies dominated financial markets because they control massive capital and capital creates opportunity. If you want to think like institutions, you must understand this principle. Money grows when it is invested, not when it sits still. The biggest secret is financial is this: the most powerful companies are not the ones that sell products, they are the ones the control capital. Insurance companies control capital, and capital creates wealth. Now you understand their real business, not insurance. Investing. If this video changed how you see money, subscribe now because the next video will expose how banks use your deposit to build wealth. And once you understand that, you will never see the financial system the same way again.